Microsoft and Meta platforms have made huge investments in artificial intelligence, and their share prices reflect their success early on. But investors are asking me which one of these two is the better AI stock to buy with current market prices. I'll answer that question in this video by comparing these two across important financial metrics, including revenue growth, operating cash flow, and returns on invested capital. I'll also look at valuation using my proprietary discounted cash flow model to calculate a fair value for these two stocks and compare with the current market price to see if they're undervalued. So let's start with revenue growth and the trend line for revenue over the recent decade. Microsoft has done a great job boosting their revenue from $94 billion in 2015 up to $282 billion in the most recent trailing 12-month period. Of course, Microsoft has made a few acquisitions in that time, helping facilitate revenue growth. But in recent quarters, the business's organic growth is also coming along just nicely. The company's invested aggressively in artificial intelligence, and the management team told investors that their cloud computing segment would have generated even more growth if they had more supply of artificial intelligence computing power. Furthermore, Meta Platforms has also increased revenue significantly, increasing by nearly 10x since 2015, from $17.9 billion to $179 billion. Meta Platform boasts 4 billion monthly active users on its variety of apps, including Facebook, Instagram, WhatsApp, and Threads. The company is investing aggressively in artificial intelligence also to help advertisers begin their advertising campaigns and generate a better return on advertising spending, to target marketing more effectively, and also to surface content that users engage with more frequently. The better the app becomes at surfacing content that creates engagement, the more time you'll spend on its apps, and the more advertising will be shown and generate more revenue for the platform. They've done a great job in this regard as well. The next metric I wanted to compare these two on is the operating cash flow to sales ratio. And in this regard, these are two of the best companies in the world, not number 1 and 2, but among the best of the best in this metric. Meta at 57.2% boasts an incredibly strong operating cash flow to sales ratio. Very few companies have a ratio above this level that Meta Platforms boasts. It's been volatile over the previous decade, but the most recent number is similar to the number they delivered in 2015. Click the link below to watch the full video.